Hey, good morning, everybody. Welcome to Opening Bell. And what a day we had yesterday. Everybody hearing me okay? I've had some
Yep, you're
trouble even
loud,
getting in my
loud and
room on
clear,
this.
Mark.
What's that?
Loud and clear.
Loud and clear. Okay, good, good. Want to make sure that was working. Thanks, Tom.
Yep.
Um, all right. So, what a day we had yesterday, and already the market's having second thoughts, isn't it? Deciding maybe, oh, maybe I didn't need to go down quite that much. So now we're rebounding a little bit here. And futures are up 22. Nothing too major. I want to go over something I got in an email from somebody earlier today too. I'm just bringing that up. We're going to talk about that. Okay. Anyway, so let's get started. So just to kind of review what happened there yesterday. Why in the world? I got to drag this out of the way. We had that heck of a drop here. I was reading it was the biggest one-day rout since March of 23. So that's a pretty good slap around the market got there yesterday. And the VIX, let's go over and look at that. You guys know I'm all about the VIX. In fact, I'm going to talk a little bit about the VIX too. Oops, I hit the wrong one. All right, so the VIX spiked way up. And this brings to mind, I believe I told you guys this yesterday when I was talking about doing trades in the VIX. I'm going to talk about that here in a moment, but look at that spike. Now, if you happen to be long the VIX, I would probably definitely consider just getting out here, or maybe even could have done it yesterday, because see how the VIX comes right back down? We were at 1478 now. At we dropped over a point already from a high of 1538 earlier. So whenever you do these type of trades where you buy a vertical in the VIX, don't hang around here hoping this grows for you. When you get that pop up, just take it and get out. Now, somebody wrote me and said, hey, you need a lot of contracts to really make any money. Well, it depends on how you want to play. I mean, for one, this is a spec play. I'd never really want to, put too much money into it anyway. So I don't usually use a lot of contracts for something like this. Uh, but if you do say this 1419 contract we have here, let's just make it 1520 since the VIX is up a little bit. And I like to do them about a month out because that way it gives you time for that pop. But if you put this on today and we got another little over a point pop, you'd already be up very likely 40 or 50%. Just take it off. Yeah, you don't want to be waiting around for up in here. It might happen once in a while, surely would happen once in a while, but you cannot count on that. So anyway, I wanted to go over that. And I don't think I would be putting on this spec play today. I'd wait for it to come down a little more. Unless, it is speculatory. If you want to have the opinion that we're going to go right back down again, then I guess it would make sense. But other than that, I don't think this is a good day for this. But I just want to review the fact, yes, I mean, if you were looking for big bucks, I get it. If you did one contract, you paid 90 something dollars, maybe in a 2 point pop, you could make $35. If you did 10 of those, yeah, you got 1,000 in it, maybe you'd make 350. I mean, I don't know. I don't think I'd really want to ever be any bigger than that. And that's probably too big for a lot of people to do 10 of these contracts. Um, all right. So let's go over here and talk about the SPX. So whenever you've had a move like we've had, and here we are, we're up 20, the VIX is down 1. What can we really do the next day? Well, to me, I mean, later on today, I'll be looking to get into a trade. And I think one decent idea, I'm just going to hit it again, folks, because if you're going to do a trade in a market where we're pretty volatile, something with duration is good. So let's go out here and look at this one again. The March 22nd, that's a Friday, 37 days out. And if we used we'll just use the close from yesterday as an example. But wherever we're trading by this afternoon, so if we're at 49.53, you could definitely put this at 49.50 as a center. As always, folks, if you have questions along the way, go ahead and put them there in the chat feature. So 60 up, 70 down. We'll take a look at that and see what we think of it. It's 48.80 mark, 48.80. There we go. All right. By the way, you can do this with puts or calls. So if you did it this way, 60 up, 70 down, and we do run back up towards those all-time highs, you'd be down about 52 at the upper break even and basically flat at the lower break even. And then if you wanted a little more downside protection, you could do 65 up, but you'd be down over $100 if we got up here. Doesn't mean it's the end of the world, but it is something to think about. And I have to say, if I did get up here, let's say you had this on, I would probably take it to the upper break even. And if we get there, I would add a calendar and the same expiration to the upside. So if we get to, where were we? I'll go back. I'm just going to grab a calendar here and then we can move it around. So we're here to analyze. All right. So if we get up here and you wanted to protect yourself, of course, you need to add a little more room to the trade. Hold on, just say a note from Tom. Okay. All right. I'll talk about that in a moment here, what Tom just sent me. All right. So we're up here and we're about 50.07. We need to protect ourselves. I'd probably go up in that same expiration and maybe even look at 50.40 with the calendar. And you could then do it 3 days wide, 4 days wide, 7 days wide would be the most I would do this calendar. Let's just make it 3 days wide. And then if you add that to that, I'll talk about that, Jake. That's a good point. So the reason that you could go up here and you could add a fly, and I'll talk about that too. Why would I add a calendar when I'm up here? What do you think happens if we run up here? What would happen is the volatility would drop even further, wouldn't it? So volatility would have dropped even further. And by the way, we've ran up. Sometimes it slows down after that. Sometimes it doesn't. But if you said, hey, I think we will slow down in here, maybe even pull back, then I would look at a calendar because that is going to give you a little bit of long volatility, right? We'll go from being short 47. We're going to cut that in half if you just added a one lot calendar and you'll give yourself more room. Now, if you wanted, a little taller trade, a little more delta or Vega increase, just do 2 contracts, you'd actually be flat Vega. So that'd be kind of interesting way to look at it too. If you add a 2 contract calendar up here, we go from short Vega to flat Vega, basically. And you got a whole lot of room. Now, as Jay pointed out, and that's right, when the vol drops as we run up here, as Justin's saying there, that makes putting on this calendar more appealing because we're in a lower vol environment. And if it does happen to stay here and maybe vol stabilizes, that's fine. But if it pulls back, vol could go up and that could even be better for our calendar itself. Now, could you go up here and add a fly? You bet you could. So if we're at 50.10 and we're saying, hey, we're going to adjust this thing, you could do the same thing. You just go up to 50.40. And by the way, if I started with calls, I'd probably use puts and vice versa. It just makes the trade look a little cleaner. I think when you're looking at it, when you have a set of fly that's calls, a set of fly that's puts, I think that makes it a little easier to see. So if we went up for 30, 40 points, go to 50.40, then your top would be 5,100, right? If we went up 60. And then for down 70, we would go to 49.70. So yes, you could go up here and add a fly, and that's fine too. If it keeps going up and vol drops, it'd probably be even better for you, wouldn't it? But you're not wrong if you had a fly or a calendar. It's the same thing. Yes, if we're on the downside of the trade, I normally would add a fly because vol probably increased. I don't mind getting a little shorter volatility, but you could add a calendar down here. I'd want us to probably be below 15 or so on the VIX, and then you could consider it. And definitely, if I was at 13 or 14 on the VIX and at a lower break even, I'd probably even add a calendar down here. But a fly wouldn't be wrong. Anytime you want to add a fly or a calendar, I don't think it's wrong, except, well, probably the VIX was up high in the high teens or 20s. I'd never add a calendar on the downside for sure. And I'd be reticent to on the upside. But, and by the way, this goes for adjusting calendars and flies. So that's a trade I think would really be in focus today. But later on today, let's see what the market does. As we saw yesterday, it took a little while, but then it's really accelerated down and then it made a rebound. So if you can wait till that last couple hours of trading, I think you're going to be better off by waiting till then. Now, could you do this in a shorter time frame? Well, you can do a butterfly in a shorter time frame, but it wouldn't have the same record, I guess you could say, or probability of success that the all put does, which is about 80% if you do it 35 days and up and follow all the adjustment parameters and structure parameters. But if we went to February 8th or March 8th, that would be 23 days out. Now, why would you do the butterfly here? Well, you might do it here if you get a little faster time decay. If you have it set up like this, you'd probably just take it off. If we run back down, you'll be at a 10% profit easy, but you'll be in trouble a little quicker up here. Now, you could also consider this doing 60 up. Then you're not in as much trouble up here, and you don't make as much money down here. And what do I get for it? Well, I pay more for it, but I get a little faster time decay. But even in that all put that's 35 days and up, the average time in is 8 to 10 days, even with adjustments. So this is okay too. Just be aware that you're down a little more on the edges usually. Whenever you do something shorter term, you're going to pay more for it. And if I came on even shorter term, well, it gets even worse, right? When I'm down, when I'm in a problem trade and a problem part of the trade. So that's why I don't normally do flies myself under 21 days, just because a fly is very movement based, and you'll notice some problems with that if you have a short-term fly on at times. Now, could you go out and consider some sort of a calendar today? I think you could. Maybe go a little under where we're trading. So if we were at 53, let's look at that. Let's just see what this looks like. And if you went out to next week, I'd probably still do 4 days. Even if we're sub 15 on the VIX, I'd probably want to be 4 days instead, just 3. But I wouldn't tell you that you're wrong. But look at this calendar here. I'm great to the downside. I have more room than we even needed yesterday. And on the upside, you're basically good till all-time highs. If you do the call calendar. Now, if you do the put calendar, the structure ends up a little different here, doesn't it? That's just the way, more people have been buying calls than puts, and I think it's put some pressure on the call pricing. Maybe it's came down a little volume. I don't know. But if you do the put one, it doesn't look quite as good, does it? So I would do the call one. Generally speaking, it doesn't matter. But whenever you have these times where volatility is affecting calls versus puts in this kind of more profound way, which, by the way, I haven't really seen calendars really turn out like this myself until the last few months. Really interesting. But they look good here. I just took off a bunch. I had calendars kind of all over the place from last week, and here in this expiration, the 23rd, the 16th expiration, the expiration for this week. I took them all off yesterday at a very nice profit on that down move. Now, I was down some. Of course, the day before at the all-time high, I still had room, but I had a lot of room and was able to take it off down in here. But could you put one of these on today? Yes, you could. I think it would be more appealing if the volatility drops even more. Now we're seeing the pre-market craziness with the graphs. which makes the job harder for us to show things. But so that's kind of what I'm looking at today. A fly, maybe a calendar, depending on how things go. But no matter how I do it, I want to look at things in the afternoon rather than do something this morning.
Hey, Mark.
Yep,
So you're okay on those calendars going like a week out on for expiration, but the butterflies you try to stick to the 35 or so days, correct?
absolutely right. Well, 21 days and up on the butterflies. I prefer the all put, which is 35 and up. And the calendars, I do shorter term, usually anywhere from 4 to 18 days. Okay. Anyway, that's how that would work. All right. So I wanted to talk, I don't know if this is going to work for us today. I'm going to try it. I wanted to talk a little bit about why a call fly instead of a put fly. Well, you could do either. To me, there is no difference if you wanted to do either of these calls or puts, you pick them. Now, you know, wait a minute. You go, Mark, look at this. It's $15 for the call fly, and the debit's only $6.25 for the puts. Well, that looks like, oh my goodness, I should do the puts. They're cheaper. But the thing is, because brokerages make a unbalanced put fly, they margin it like it's a debit spread and a credit spread. I don't know why. They don't do it in calls. So your entire cost in a call spread is in the debit, $15.15. But if you do the put, $6.25 plus 980, basically it's the same price. But you can do either. In my mind, there's never a reason to prefer calls over puts and flies in SPX. You could do either. I've told people you could do call flies in SPX the rest of your life and never do put ones if you want. I just put ones in sometimes. I start there, sometimes calls. But the main use I have out of doing the difference, as I talked about earlier, was that you it makes it easier for you to see in your brokerage platform.
What, Dahlia? Oh, yes, of course.
What? Hold on, we got somebody isn't muted like they should be. All right, let's see. Anybody else? I just found one. Okay. But that's a little bit about the difference between calls and puts in the flies. All right. Any questions on any of that? There was one thing I don't think I'm going to be able to do it. I don't think this is going to cooperate. Let me find out if the graph, because it's pre-market, is going to cooperate. If it doesn't, I'll get this done in the Traders Lounge tomorrow afternoon at 1 at nothing, if nothing else. But let's see something here. These are all darkened out. All right. Yeah, I don't think I'm going to be able to show you guys this. I'm going to try it. Hang on. Yeah, no, it's not even populating or anything. So I'm going to talk about diagonals, though, probably tomorrow afternoon in the Traders Lounge. Doing any back ratios. Yeah, I'll talk about one of those, Lee, and thanks for being here, Lee over from where I was before. Yes, I haven't done any, but yesterday would have been a good day if you had one on the day before, wouldn't it? On the back ratio. A back ratio, and I'll get more into depth in those, to me is a trade that you'd only really want to do if you believe we were about to have a 70, 80, 100-point move like we did yesterday. Once the move's made, no point in putting it on unless you felt like it was going to do it again. So if you were sitting here today, and you also need to think it's going to happen in the next couple of days. So if I thought in the next couple of days SPX was going to move 80 points in one direction or another, you can consider a back ratio. And the way I like to do them is I like to go out about 14 to 18 days. Why that far out? Because time decay really does affect these trades. So maybe March 1st, I usually use a Friday. And what I normally do is I'll go to a large number, usually 50, or either a 0, a 25, a 50, or a 75, right above where we're trading. And that will be where I'm going to sell my back ratio. So you end up buying a back ratio, even though that's where you're selling your short. So buy back ratio, I'm going to analyze it here. And where is it? There it is. The way I do these, and I'm not saying it's the only way in the world to do them, this is how I've been successful with them, is I sell 2, buy 3, and if you want something bigger, you can use that same ratio, buy 6, sell 4, that type of thing, and bigger. And I make them either 40 or 50 points wide. So if I sell the 5,000, I buy the 550, and I want at least an $8 to $10 credit if I can. This is an $18 credit. And if you look at it, let's bring this down. So if we had this on, say we'd have put it on the day before yesterday and we make this big move, hey, you're feeling good about things, right? And the reason I say, though, that you need to get out of it in a couple days is it very rapidly starts to lose money around the spots up here near your shorts. So what can happen is if we ran down yesterday, you really should take it, because if it runs back up in here, you're going to lose it. On the same note, I always say if it runs up in particular, if you put this trade on and the next morning you're up here and you're making money at all, take it right now. Do not wait. Do not wait. Don't wait 15 minutes. Take whatever you got up here, because this will rapidly disappear as vol drops. So you don't want to be there for that. Down here, you could be more patient because you have time decay and vol. You know, if it's down here, you're doing all right. You're a long way from your shorts. Risk down here is it could run right back up, right? So you got to be aware of that also. Lee says he had one on yesterday, open end of day, so that worked out. Yeah, very nice. And after the shutdowns with COVID back in February and March of 2020, this is about it, what I did exclusively from February 25th through most of March of that year. I just did these every day. It was incredible. There was 2 weeks where I think a 2-week period where we went up or down at the open every day in the SPX. Believe me, this is crazy. Crazy good trade if we really are moving. But if we're not, then you just lose on time decay, usually. Now, another thing you can consider, sometimes I'll come in and I'll do 40 points up and see, you get a little quicker gain up here. So if I was leaning, like I thought it could go either way, maybe you're leaning upside, maybe do 40 points. Now your credit's less, but you can really take off up here and make some good money. If you just want to be totally non-committal, then the 50 pointer is pretty good. All right. Let me go back up through the questions, and I want to go over something Tom had put in here for me earlier. Adjusted back ratio would have been great during COVID. Yes, I did outstanding with those during COVID. I have to hold on a minute here. I'm going to stop share just a moment and work on this thing that Tom sent up here for me. Get it right. And if you got more questions, go ahead and put them in there. I'm going to be right back. Okay, copy. Let me see something here. I'm going to be back to sharing here in just a moment, folks. Okay. All right. Let's see if we had any more questions down here. Okay. All right. I'm going to share again. I want to show you what Tom wanted me to talk to you about. Now, if you look down here, I'm going to put this in the meeting chat. I'm going to put this link in. That is the sale page to join my Opening Bell Traders Lounge starting on Tuesday of next week, not Monday, because the market's closed. We won't have either of those. But starting on Tuesday of next week, you'll have to be signed up and paid here to be able to come to the Opening Bell or the Traders Lounge. Now, additionally, we talked about this yesterday in a trading group, and I've decided I'm going to start my trade alert service that we're calling Mark's Income Trades. And you can actually buy that for $100 a month. And or if you want to get both, let's say you want my trade alert, I'll explain more on that in a moment, and be able to come to the Traders Lounge and the Opening Bell. It's $125 a month. If you just coming to the Opening Bell and Traders Lounge, it's $50 if you sign up by the end of February. Or it's going to be $75 after that. And anyway, there's a bundle there. If you want to do both my trade alert and come into this, you can choose from that. and we'll probably need to add more stuff here also, with some links on just getting one or the other. But there it is. If you want to sign up for that. Now, how's the alerts going to work is I'm going to use primarily, I might throw in a back ratio and stuff once in a while when I did it, but almost exclusively I'll do calendars, butterflies of different duration and type, diagonals, and the occasional probably back ratio. I'm going to be doing those trades. I'm going to put out a trade alert for 2 trades a week. And what I'm going to do is when I put on a trade, I'm going to text it out what I did and when and how much I paid, so you can follow along and do it yourself. If you like, put it on a paper, live, whatever's right for you. And then if I ever adjust the trade, I'll text out exactly when I did it, what I did. That'll all be there kind of real time. And then when I close it, I'll also text out, hey, I closed it. So you can follow along with me. And that's how that's going to work. To get the income trade alerts and the Traders Lounge help desk bundled together, $125 a month, or you can pay 1 yearly there. But so Tom wanted me to go over that. And don't forget, after Friday, you'll at least need to go over and get the Traders Lounge opening bell, or you won't be able to come to this next week. All right.
Hey, Mark,
Yep.
on your personal trading, would you say you're averaging on average about, I don't know, 5-10% per month, give or take, on these strategies?
Yes, and I always tell people, and it's true, that over time, I think if you do a conservative portfolio, you should be able to average between 7 and 10% a month. Some months you might lose, some months you get more than 10, but somewhere in there, 5 to 10% a month, if you're managing your trades properly, is what you should be averaging. Good question, frequent question. Any questions on anything else there on that bundle or?
Hey, Mark,
Hey.
question.
Yeah.
Hey,
How
this is for Mark.
I don't know. We got
Hello?
2 people talking at once. Go ahead, Lawrence.
So on a 25, 30K account, I know you don't make recommendations. How scalable is it up? Like how much of that should I devote to this low, would you consider this low risk trades? Like
Yeah, well,
income trades?
for me, whatever money you're using to trade options in my own world, I'm doing 99% this with whatever money you're using. Now, if you want to use, if you want to do a lot of spec, you can leave some money on the sidelines or other things. But I do 99.9% of what I do in the SPX counters, flies, diagonals. So if that's what you were trading, and I want to say, by the way, you need to be well versed in whatever you're doing to put, your money into it. But if you are, yes, there's going to be, this is all recorded, by the way. And now, Seda, you had a question? I'll come back, Lawrence, if you have.
Yeah. Hey, Mark. This is Sada. I have already subscribed full-time, annual subscription of $500 based on your mail.
Yeah.
So how does this bundle work? Because will it include your alert services, or will it not include? Do we need to do anything different? What is it?
Oh, you're going to have to talk to Tom about what we're going to do with people who signed up, who now want to do the traders alerts. So I'm going to have to ask him how we're going to do that. Okay. Because I know you're already signed up for the year for the opening bell and the lounge. But if you want to do the alerts also, then we'll have to talk about that. But next week you can come to this room as normal because you're already signed up.
Yeah, but can I sign up only for the alert separately instead of doing it for the lounge?
Tom is in a meeting now. When he gets done, I'm going to talk to him and see if I can get you a link and other people a link who've already signed up, who might want to say, hey, I want the bundle and that discount. Okay. We'll work out something.
Thank you.
All right. I understand.
Yeah, Mark, I also sent you an email separately. So in case you have time, I suppose you remember me. I'm from Sheridan Mentoring.
I do remember. I remember you.
Yeah. So please respond to that email if you can. Thank you.
Yeah. I responded to one. I thought, send it again, say it, and I'll make sure I do. I thought I responded to it, but send it one more time.
Thank you.
Get it. All right. I think somebody else, one last question, didn't we? Did anybody? Okay. Well, you can put them in the chat too. Okay. Let's go over here. Can we get a Zoom video? Yes, this will be recorded. Jim Clements, how do you time your adjustments? Do you wait until a certain time of day and make needed adjustments 30 minutes before the close? Yes, what I like to do, first 15 minutes of the market, I would never adjust because things have a tendency to move back the other way. So what I do is if I'm at my adjustment point after that, and I can watch it, then I'll wait and if it gets more than 5 or 10 points past an adjustment point, I think you have to adjust right then, even if it's 30 or 40 minutes into the market. But otherwise, if I can watch it, I'm not going to be gone. I'll let it hang around that adjustment point until the last hour or two of the day and then adjust. Hope that helped you out. Mark, for the fly, just the spread is more than 8%. The difference between bid and ask is 8% plus of total debit paid. Is there any check limit we need to keep on the spread? I had issues. I'm not exactly sure what you're asking me, Vera, but I start at the mid price. I don't have a Discord room, Jim. I start at the mid price. If I don't get a fill and I'm buying something, in a few minutes I'll go up a nickel, a few minutes more, maybe a nickel. I never go more than 15 to 20 cents over the mid. I don't have to, and I don't do it if I need. I just don't do it to get in a trade. So that's how I handle that. But I will, those folks who already signed up for the lounge and opening bell, if you want to do the traders alerts, the trading alerts, Mark's income trading alerts, well, I'm going to work out something with Tom for you. We can get you a link to help you get that discount for those who already signed up. I'm not going to mess you up when you signed up early. But everybody else, remember, you have to sign up before Tuesday, or you won't be able to come to those. There will not be any day trades, Lawrence. Absolutely not. I don't do them. So it will be calendars that are anywhere from 4 to 18 days, double diagonals in that same 4 to 18 days, and flies generally that are 21 days and up. That's what they'll be. Okay. And I don't use a stop loss in the physical sense because there's no real way to put one on a spread, because if you put in a stop loss, you'll get filled at the bidder ask and get a terrible trade. I do more of a mental one, and I'll get into that more in the future, but I don't generally use one except if I can't adjust a trade and I'm down, then I get out of it. That's my stop loss. But I'll talk about that more in depth at a Trader's Lounge and in the future too, Lawrence. Those are good questions. The first trade will come out next week, Lawrence, for my trading alert, perhaps even on Tuesday. But if we opened up or down 80 or 100, it might not. I might wait till Wednesday, but generally it will be 2 trades a week, probably somewhere between Monday and Thursday, usually for those 2 trades, and any adjustments I make whenever that is. Okay. I appreciate all you guys' interest. I'm going to be back here tomorrow morning at 8 Central, and we'll have a Trader's Lounge tomorrow afternoon at 1 o'clock. And I'm going to talk with Tom, like I said today, and we'll get this straight for people who've already signed up. If you haven't signed up yet, hopefully, well, you already have the link. I just showed it to you. There's already a link for you to bundle trading alerts and the lounge all together and opening bell. All right, folks, have a good one. Bye-bye.